Welcome back in. It's time for Money Tuesday. You're looking to buy a house, possibly refinance, take out a home equity loan. Well, mortgage rates are still near record lows, but they keep getting higher. And what is driving those interest rates higher? Marshall Clay with the Welch Group joined us now by FaceTime with some advice on that and some expertise. Good to see you this morning, Marshall.
Hey, good to see you, Mike.
Before we approach the question, is it too late for people to refinance? Have they missed their opportunity? Let me ask you first, so what is causing the interest rates to keep creeping up, really since about, I think, around early February?
Yeah, so I mean, I think it's a lot of optimism about the economic situation, economic improvement. There's potentially some inflation kind of creeping in there. So you see the 10-year U.S. Treasury, which really is one of the primary drivers of mortgage rates. It's creeped up. It was at, I think, 0.5% about 8 months ago, 6 to 8 months ago, and now it's up to around 1.7%. So that's going to be the big driver for interest.
Yeah, and obviously everything depends on your credit score in terms of what kind of rate you can get. But, and so when the Fed says, look, we're going to leave rates at zero, that means nothing in terms of mortgage rates. So if you're looking to buy a home, what should folks think about right now? Is it too late for them to buy a new home? Because you think even with prices up, I can get more home for the money with the interest rates still low.
Yeah, I mean, I think that's what I typically see is that it's certainly not too late. I mean, we are still in historically low rates, but what I tell people all the time is low rates don't necessarily mean that you're going to get a good deal. And so what I mean by that is there was a recent survey that came out that said that, and this is nationwide, and I think this is unprecedented, or at least in the last 20 years, where we've seen a double-digit increase year over year in the price of homes. And that's nationwide. It's even greater than that in certain areas. So even though your capacity to pay to afford a mortgage is probably better in this really low interest rate environment, I mean, look at the price as well. I mean, you're paying a lot more than you were paying, 12 months ago. So don't feel like you're getting this great deal because you're getting a good rate. And I would tell people, look, do your research and understand the response function that your particular area, the area that you're looking at, how it responds in rising interest rate or high interest rate environments. That'll go a long way to telling you, whether or not you should pursue a home in that area.
And can you expound real quickly again what you mean, let non-financial priorities sort of guide your decision making?
Yeah, and I would say for most people, obviously the financial component is the largest component. But I tell people, look, try to separate the money out for a second and prioritize all the other things that you want, whether it be school system, whether it be proximity to work, whether it be, or proximity to family or safety. Try to think about all those other non-financial priorities, because really I always tell people, look, price is what you pay, value is what you get. And so if you're getting lured in because of low interest rates, but you're not taking into account all those other priorities, you may be making a mistake.
All right, real quickly, we got to wrap up. Time horizon being the key. What do you mean by that?
Yeah, so time horizon is important regardless of any investment. I really view housing as more of a consumption item, but I think if you look at it through an investment lens, I think it's important. If you have a really short time horizon, I think if you're dipping your toe in the water of a potentially high price area, you're potentially putting yourself at risk. If you have an intention of staying there 5, 10, 15 years, I think if you overpay a little bit, there's a little bit less risk there.
Yeah, so some good advice there from Marshall Clay this morning. We appreciate it. Marshall Clay from the Welch Group. Thank you so much.
All right, thanks, Mike. Have a great day.
All right. Still ahead now. Next, it's National Tartan